Welcome to the XM.com weekly market update, and we're joined once again by Pete McGuire, the CEO of XM. Welcome back, Pete.
Good morning, Andrew.
It's been a few weeks since we last spoke.
Yes, it sure has been.
Plenty going on, particularly in the US with the banks, the regional banks struggling. So we'll touch on that a little bit later.
Certainly.
We'll start domestically again. The Aussie CPI number came out last week. It has dropped, thankfully, but it is still at that 7% mark.
Yep.
So it's remaining stubbornly high.
It certainly is, and we've had a little bit of a good news story with the pullback as far as energy prices. So that's assisting the consumer. But after spending nearly 4 weeks in and out of Dubai, they are wanting higher crude prices. They want 85 to 90. So it's going to be interesting who wins from a producer standpoint or the consumer. And at the moment, consumers winning, but I'm not sure if that's going to last.
Yeah, and it's sort of interesting. It plays into the whole interest rate story as well, which we'll touch on as well, where with the RBA meeting later today, will they raise interest rates? The consensus is unlikely, but we suspect if they don't do it this month, they'll probably have to do it next month.
Yes, exactly. About a 10% probability.
Yeah, and that plays into the housing market. Obviously, the housing market's sort of come off quite a bit. It seems to have stabilised a little bit in recent times.
Yes.
So that is partly because of, obviously, the higher interest rates have brought the prices down, but the lack of supply on the market.
That's a real big point.
Yeah, and that sort of hides things a little bit, where if people are pulling their house off the market not to be sold, it tends to support the housing market.
That's right.
So,
but there's not enough stock, see?
No, and the lending rates, what the banks are lending to both homeowners and investors has come off significantly. So, and
you talk to people that were on, they had $1 million they could have spent, and now they're back at 740. So, and that's just a multiple across, when you extrapolate the number.
Yeah, but it's interesting. There's been some reports out overnight where they feel as though that housing price now for Australia has sort of stabilised a bit. So it'll be interesting to see where that goes in the coming months.
Certainly will.
Over Japan, the BOJ kept that interest rate pretty much as it was.
We didn't expect anything really, no surprises from the new governor, Mr. Ueda. So he's been in the role now a month, and I think he's just sat on his hands and just see where the lay of the land.
Yeah, and I think with the CPI, it drifted up slightly last month, but it is still quite low in global standards. So there's probably no change in the interest rate. No surprise.
No, well, there's not. But the interesting point is, I'm just making a look at here at the yen. It's back at 137. Now it's gone from, in October it was at nearly 150. There was a lot of intervention. Back to 128, and here we are, start of May, and we're back at 137. So it's incredibly volatile. If you wanted to trade any currency, really the yen has been just absolutely on fire for the last 6 months.
Yeah. Over to Europe, the GDP numbers came in as well. So once again, if you look at that, that's a 2-year chart there. It's all positive, which is sort of interesting, where if you looked at Europe over the last 12 months, and there hasn't been a lot of great news economically out of Europe, yet they're keeping their head above water.
Yeah, they are. And you're remembering it's a big, wide, wonderful world, Europe, because there's, I think, 20 members in the Eurozone, or approximately, and you've got some that have got massively high inflation and others not as much. And then you've got some that are performing reasonably well, and the likes of Germany's doing okay, but the likes of Sweden, it's really under fire. So, I think this is all going to bear its fruit. And we're going to see, we've got an ECB meeting this week as far as rate rise, and what the probability is, I'm thinking probably 50 basis points. So it could be a very interesting currency move. You've got the Fed and you've got the Aussies. So let's see who moves.
Yeah, plenty going on.
No shortage.
And once again, in the Eurozone, the inflation rate came down quite a bit actually last month, from 8.5% to 6.8%. So that is a big drop, but still a stubbornly high number.
Stubbornly high, and you've had that pullback as far as energy prices. So that flowed into that, and a mild weather for winter. So all of those points. Hopefully that this continues, Andrew.
Yeah, well, that's the
name of the game.
Yeah. GDP again, US 1.1%, so lower than expected, but once again, positive number, which is a good thing. But things seems to be abating a little bit in the US. The labour market seems to be settling down a little bit as well. So
about a 145 handle, I think we've got for April non-farm payrolls being released this Friday. That's a guesstimate. So let's see how close that is on the money very, very difficult forecast, the old non-farm payroll. You can be out by 100%.
And the dollar index, so 101 there, this is a chart from yesterday. So this has drifted up slightly overnight to be just over 102.
Yeah.
But yeah, it's an interesting chart to see what's happened over the last 6 months.
Absolutely. You know, when we put our mind back, I made reference to that. Go back 12 months and see in June and where it was, and it's nearly to that low of February, and we saw the US dollar index hit 114, 115 nearly in that October period, and that's where the yen was at 150, and then all of a sudden, the dam broke and it was mayhem all the way through to the end of December, that big sell-off, and then it just continued down to the start of Feb, and it's had a rise since then. But yeah, there's no shortage. We've just celebrated our 10 millionth client, and people are all over currency trading globally.
Yeah, for sure. Good time to be doing it with all the volatility in the market.
Oh, well, the chart tells a story.
Right, yeah. And finally, we sort of checked this too in the 10-year chart in the Treasury. It seemed to be sort of a little bit of range trading at the moment, which is not surprising. So there's like the school of thought, will the Fed raise again or will they put it on hold, which obviously keeps that 2-year rate
We're going to know shortly, Wednesday.
That's right. So it all comes out, but it's certainly stabilised a bit compared to earlier. You look at earlier in the year, look at that that 2-year.
Oh,
that was sort of way higher.
Way higher. Yeah. We've got the read coming out because you've got the blackout today, Tuesday. This week's been an interesting week. You had May Day, so Europe was shut. Yeah. Today and tomorrow, Tuesday, Wednesday, is the blackout as far as commentary from the Fed. Wednesday, we'll get the decision whether they're going as far as a rate rise, and I'm saying, 25 basis points. Everyone is. And then we've got the Euro, we've got Australia today, but we've got the Eurozone, and I'm thinking 70% probability for 50 basis points. So, yeah, we've just got to see how the bond market reacts to all of those big reverberations.
Yeah. There's plenty going on. You've got, as you say, you've got the rates, you've got the banking. I guess we can call it a crisis in the US at the moment with some of those. I know they're only regional banks, but you've got that going on. And on top of that, we're in the thick of earnings season as well.
Oh, you bet.
And once again, the big tech stocks have they've stood up this time round.
Oh, haven't they? What?
Yeah, incredible some numbers, and it's probably distorting that S&P a little bit because the small to mid caps in the S&P have not performed as well. No. Yet the large caps are getting all the attention, and they're up anywhere between 5 and 15% sort of thing in a month, which is a huge move.
Monstrous. The Pareto principle, the 20-80 rule. So and it seems to be evident this quarter. Yeah,
but they've got that power though, haven't they? They're just revenue juggernauts.
They are revenue companies. Juggernauts. You can't believe it.
Yeah,
where would we be without the internet? Oh. I mean, it could quite easily have not happened. You know, when you think about it, I suppose it could have. That's a silly thing to say, but you know, it's such a big component of our lives.
It is, and with some of those businesses, like they've got a lot of loyalty to their product. You look at like a Microsoft and how many people use Office.
Yeah,
like probably all of us. Yeah. And you don't want to use anything else. Or if you've got an Apple phone, will you go to another provider, or if Apple put up their price $10, would you stay with Apple? Well, you would, because they've got that ecosystem.
That's right.
As well, and it's very sticky, and that's
very sticky. Once you're on a platform, it's the stickiness factor.
Yeah, and particularly with these companies, they've got these recurring revenues.
Yeah, it's just spits it out each quarter.
It certainly does. So it's interesting times at the moment. Once again, we'll keep an eye on particularly the interest rate movements in the next week or so.
Keep an eye on gold.
Yes, gold, of course. We can touch on that next week. CPI in the US next week as well. So once again, no shortage of data.
No.
Good stuff. All right, Pete, good to see you again.
Lovely to be here, Andrew.
Okay, excellent. And that's the XM.com weekly market update.